So when I'm looking to build out my portfolio, I'm looking for stocks that have something related to tech and also have a good growth story. And I want to talk today about two stocks that I think have both of these things. They're tech related and they have a good growth story. And the first stock is BigBear.ai. I'm sure you've heard of it by now, but this is a small AI company that has some similarities to Palantir. We're going to go into some recent news, financials, and look at the stock chart. Then I want to talk about SOFI. This is a bank that is a disruptor. It has a beautiful tech platform, a nice app, and really strong financials, an overachiever for a young bank. Very different companies, but one thing they have in common is I see lots of growth ahead. So let's jump in. So we're going to start with BigBear.ai. And BigBear.ai, for those of you who have been following the stock market, BigBear.ai is one of those stocks that kind of reminds a lot of people of Palantir. It's AI, it's defense, it's border, it's homeland security. We see BigBear in airports, and they work in industries like manufacturing and supply chain, intelligence. They have solutions for AI, modeling, digital identity management, predictive intelligence, cybersecurity. And one pretty cool thing about BigBear is they are pretty cheap, at least right now. So let's take a look at a couple things that I dug up for this video. So first, I want to show some recent news. There's a couple recent news articles that have come out. So yesterday, BigBear joined forces with Analogic to transform airport threat detection. So I have not personally seen BigBear, but I know a lot of people have seen BigBear in airports because they're in a lot of major airports. Together, the companies have integrated BigBear.ai's advanced computer vision screening capabilities with Analogic cutting-edge computed tomograph scanner technology to enhance threat detection and streamline airport security operations worldwide. And I really like the worldwide piece of that, and we're going to look at that a little bit more in this next piece of news. BigBear.ai looks forward to joining forces with Analogic to elevate security standards and enhance traveler experiences across critical transportation hubs around the globe, said the CEO of BigBear.ai, Kevin McEllennan. As security threats evolve and adopting open architecture solutions is crucial to accelerate the deployment of advanced screening technologies and giving customers the freedom to choose the best tools for their missions. So then we also saw from BigBear.ai that they have created a strategic partnership in the UAE. And this was news that came out today. So let's read a little bit about this. This project marks a major first step in our international expansion. So you can see in these last two articles, there's worldwide, there's international. There's more than just the US market. Even though this company is based in the US, they're expanding globally, which is a good sign for revenues and recurring revenue streams and better and healthier finances in the future. Together with EasyLease and Vigilix, we are committed to advancing the UAE's AI capability. One thing about the UAE is we know that in this current administration and Trump's recent visit to the Middle East, there has been more deals with UAE and Qatar as far as AI, and it looks like BigBear.ai is getting a piece of that. So CEO of EasyLease said, our partnership with BigBear and Vigilix reflects a shared commitment to advancing AI-driven solutions that support digital transformation across multiple sectors. The collaboration brings together global expertise and local insight to deliver practical, scalable technologies that address real-world challenges. All right, so one thing I was looking at on BigBear's website before I made this video was I went and looked at their job openings, because isn't it maybe if you think a company is going to grow, well, they're going to need employees. So I wanted to see how many job openings they have currently. And I did a hand count and I see over 50 results. So they're hiring 50 new positions. A lot of them have clearance levels, full stack developers, data modelers, lead systems administrators. We also saw recently they posted this vice president of growth of business operations. So when you're buying a stock, and if you're a stock investor or retail investor like me, that is music to your ears, growth. So Big Bear knows that it's in an industry that has the potential to grow. So now they're bringing in a talent to help them reach those new markets and grow their business. Let's look at Big Bear financials. We're going to head over to Profit Viz. And currently we know that Big Bear is trading at $3.73 a share. We see that in the history of the price action, Big Bear at one point after IPO was up to 15 and has gone down and just been on a little bit of a roller coaster until recently in 2025, where there was a big run up to about $10 before sell off. And we'll go more into that in the chart. We can see that revenue has been fairly flat. We know in this last quarter with Big Bear, they said a few of the checks just hadn't hit the account yet. So maybe this next quarter, maybe that's a little bit bullish for next quarter. Their net income has been a little bit all over the place. But if we look at just the last 2 quarters, it looks like it's trending positive. Their operating income looks like they're spending a little bit more, which tracks with the hiring that we just looked at. Their free cash flow, while negative in the last 2 quarters, has been trending in the right direction. Their operating cash flow, while negative, has been trending in the right direction. And we've seen that a lot under the new management with Kevin as CEO, that a lot of these finances seem to start to look a little bit better on paper, at least. The biggest and most important thing that a lot of investors are missing is their cash and cash equivalents and total debt. They essentially eliminated most of their debt. So when you see that the last 4 or 5 years, this company was saddled with debt, and now they are in a situation on the balance sheet where they are in less debt and they're starting to trend towards positive cash flow, it's looking pretty good. So then let's take a look at the chart and see what's happened in the last 6 months and make some predictions on where this might be going. Just so you guys know, I invested in Big Bear around November and October, and I just started to become fascinated with the company. I held my shares all the way up through this rally and all the way down through this flush. So I was very happy for a little while, and then I became a bag holder. I did take some profits also, but I didn't sell my position because I believe in what Big Bear is doing. And if we get a little closer to the chart in these 2-hour candles, we can see there's been a lot of interesting price action since about this April 17th. We've seen a lot of stocks really since April 17th have some pretty significant bounces. If we look at just the last couple of weeks of trading, if we stretch our imagination, maybe we could picture that there is a bullish flag forming here. So we have the flagpole with that big green candle, some consolidation. Are we ready for the next leg up for Big Bear? I think a lot of investors are kind of just on edge and waiting to see if Big Bear can make that next move. Will it do it without a catalyst, just on the technicals, or will it just kind of chop sideways as it has been? The good news with Big Bear is, from a technical standpoint, it's starting to hold this 378. And 378, if we look historically for Big Bear, if we want to go back to when it gapped down after earnings a couple earnings ago, it was kind of just stuck down here at 378 down to 250. So now it's actually using that 378 as a support, and it's bouncing off the 378. And we've seen this beautiful green candle from just a few trading days ago. We saw this one where we got up and then rejected. So 378 has been a spot of support. I'm going to remove my drawings here so we can take a look at what's going on in these last 5 days. So I've turned on a few things here. I've turned on the volume indicator and our relative strength index because I want to just take a look and see what's going on in terms of volume and our RSI. So We see that in the big push up to almost $5, we had a lot of volume, and the volume is actually held pretty consistently. It's trailing off just a little bit, but this 378 is holding. We see that also on the RSI, we're kind of in the middle, which means that it could go either way. So what's going to happen with Big Bear from this point? Well, I've said on my channel before that I think that Big Bear is just kind of waiting for some sort of catalyst. It's waiting to explode. But would I be mad if Big Bear just kind of hung out and chopped sideways, 374, $4 until that catalyst came? Not at all. I would not be mad at all if it held this 378, $4 position. On a big contract or big news, I think we could see more explosive price action like we've seen before, where we see that 20, 30, 40% day. If we go back just 6 months, we see that off of this $4 support, we had a 150% move over the course of just a few trading days. So Big Bear can move with velocity, both up and down. If you're trading Big Bear, definitely protect yourself with a stop loss as this stock can move. All right, guys, let's move on to SoFi. So SoFi is a rock solid fintech bank, and they're a disruptor. And the way they're a disruptor is, think about most of the banks that we have, especially in the US, even around the world. A lot of them have huge buildings, and they've got to pay to have staff in those buildings. They've got to pay to keep the lights on. They've got to pay rent, and they've got to upkeep those buildings. So there's just a lot of overhead in the brick and mortar classic bank. Now enter SoFi. And since SoFi does all of its banking primarily through their app and website, they can take out all of that overhead and thus offer a more robust package. Just looking quickly at the website, we can see that they do personal loans, banking, credit scores, mortgage, student loan refinancing, travel, insurance, credit cards, investing. They do a little bit of everything. I will say this, as not only a SoFi investor and shareholder, but also someone who has the SoFi app, there's one thing that I don't think people talk about enough. SoFi makes banking fun. They have a reward system. You earn points when you deposit, you earn points when you do different things. They have this SoFi Plus membership program that a lot of people have signed up for, so you can get 4% APY. So if you're stuffing some money away in a savings account, why not make 4% on it? That's super nice. And then their SoFi Plus has savings, financial advice from financial planners, more stuff for investors, rewards, and protection in borrowing. So there's a whole bunch going on in the SoFi Plus, and that's also part of their revenue stream, their revenue model. Speaking of revenue, SoFi is what would be considered a sandbagging type of management. And what that means is they hold back and they give cautious revenue outlooks. They give cautious earning outlooks, and then they come and beat those expectations. So you can see that here in their earnings report. The gray bars here are estimates and the blue bars are actual revenues. So we can see that pretty consistently every quarter they come in and they beat on their estimates. And what this chart shows, or these bar chart shows, is this is the story of a company that is growing steadily and massively. And we actually saw SoFi get to a key psychological level in the market today at $15 a share. And we're going to go into the chart, but I just wanted to point out that the market cap at this point in time is 16.6 billion. I want to take you guys back 1 year on the SoFi chart so you can see what has happened after earnings. So during October of 2024 earnings, we saw probably the most promising rally from SoFi. We saw a little bit of sell-off, but prior to earnings, SoFi was at $18 a share, which was a 70% move. So I entered SoFi here. I was somewhere in that rally or frenzy. And I've seen SoFi go down a lot with the Trump tariffs and just wider macro fears and uncertainty. And this stock got all the way down to less than $9 a share. Even when they came in and they surprised Wall Street and they beat estimates, it wasn't enough for Wall Street because Wall Street was looking for them to prioritize profits. SoFi has been laser focused on growth. One thing about SoFi is they're not afraid to spend money on marketing. You'll see them on NBA courts. You'll see they sponsor athletes. SoFi is truly a marketing beast. So all that money they save from the brick and mortar, they can put back into the business. So what's been happening in the chart is most stocks by this point in April got washed out. So most stocks at this point in time, there's been a recovery. What's the difference between SoFi and other stocks is SoFi has continued to post better and better revenues, beating estimates quarter over quarter over quarter. They're making $700, almost $800 million a quarter. It's pretty, if we just kind of look at that trend, it's going to be sooner than we know it, they're going to be posting billion-dollar quarterlies. So SoFi is a cash generating machine and they're a disruptor. They're a bank that if they're not completely acquired and bought out, they're going to just get bigger and bigger and bigger and soon be a titan in the financial industry. So right now at $15 a share, which is about my average, and I'm fine with that. I know the stock, in my opinion, as long as the macro stays good and the market stays as it has been, then this stock is going to continue to climb, and it probably deserves to be higher than its $18, which is its year high. Let's look back all time, and we can see that after IPO, the stock at one point was 27, 25, 24. We see some wick touches there. So if we're really like considering where the stock could go, if we just retested those all-time highs, we could kind of measure that out and see what that would look like from this point at $15. So that would be still about 85% of upside. And that makes some assumptions that the market continues to do well, that SoFi continues to post good earnings and grow as a company. I have no doubt I sleep well at night as a SoFi investor. And of course, you all need to make your own decisions and do your own due diligence. But I hope you enjoyed this content. These are two stocks that I believe have a lot of growth potential in 2025. I'm personally invested in. If you like content like this, please consider leaving a like or subscribe, and hope you have a good one.